Welcome back to Primary Source China Investment. This is a new season. This is the 6th season of Primary Source that we're doing. Peng Guo and I are happy to be here. This is show A of season 6, and we're talking a little bit about equity again. And it's not something that we wanted to talk about it, but the calendar has changed over, but the trend has stayed the same. And we've been saying equity needs buyers, and they need an impetus to buy. But the news, however, continues to be bearish for locals and foreigners alike. Everything from the macro data, the stock market returns, the shockingly low birth rates, even consumer sentiment. All of the news that's been coming out since the first has been bad. Maybe after Chinese New Year, we'll get some change, but it doesn't look that way right now. There's also an emerging, and I would say false narrative that's been going around that the home team is going to step in, which is China's sovereign wealth fund. It's going to be buying stocks, and that's going to provide the impetus. Look, 2 years ago, the market cap of mainland stock markets was 14.5 trillion. Now it's about 10.5 trillion. You don't make up a $4 trillion hole with a $1 trillion sovereign wealth fund that's already fully committed. Could Beijing's actions spur some buying? Absolutely. But so far, it hasn't. So, Peng Guo, what do we think of the current state of the investor right now?
I think current state for the investor is the panic, or is they want to find or they just it's really like the bottom, like the normal investor, so they feel pain and then they want to just give up. I think most people choose doing like that, and or they want to stay in the safety harbor, like the treasury bond or bank CD, some things. But I think if you are continuing to do the investing, is probably the good opportunities, but it's hard to predict the exact the bottom.
Yeah, that's sort of like peak bearishness, right? When
Yes.
everybody else wants to sell, maybe that's the time.
But at the right moment, most people want to sell rather than
Yeah.
buy.
Yeah,
Mm.
that's definitely the case. I was looking at the calendar to see, what's on the horizon, what might be a trigger, what might send some message. And, the only thing that's really on the calendar is the Lianghui coming up in March. This is the dual sessions or dual meetings, whatever you want to call that. And if we go back to 2023 at the Lianghui, what were the big priorities? Remember, there was something like 7 priorities, so we can quickly run through them. GDP greater than 5%, and we're saying could reach 6%. The official print for 2023 was 5.2 recently. That was not met with a lot of euphoria. Create 12 million new urban jobs. Official numbers as of October was about 10.22, so they may make it by the end of the year. Keep CPI growth at 3%. This is a big miss because CPI actually decreased as seen in the deflation numbers. Bring the growth of residents' income on par with national economic growth. Another is promoting stable, high-quality imports. A lot of this hard to measure. Maintaining grain production, continuing to reduce GDP per unit of energy use. A lot of this is about clean energy usage and things like that. At the time, plenty of consultants and bank analysts were hopeful, and many commenting on the opening up. The reality was that much of these priorities were simply missed. And the March meeting will have to reflect a weakened economy and subdued consumers. So going into this Lianghui in March, we're going to see probably a very different tone. What's your thoughts about that? I know it's a little bit out in the future.
I think at the current moment, increase the job opportunity as well as increase the disposable income for the people. That's most important. But unfortunately, there's a lot of the debt problem, shrink the economy, and also lose the confidence, and also the hidden problem. They get all pop up at the moment. I think that's a pretty hard situations right now.
Yeah,
So
that's the reality, right? When people looking at the real
yes.
data, and that's reflected in the stock market. Like we're 2, 3 weeks into the new year, CSI 300 is down 4.5% already. The only sectors that are up, I believe, are energy and utilities. So, what's that really telling you? That's telling you that that's recessionary, that's defensive positioning. Even some of the themes have followed the same path. New energy is down almost 2%. Food and beverage is down 7.21%. Biotech and pharma is down more than 8%. So a lot of these themes going into the year, like, oh, the consumer's going to go out and they're going to party and they're going to eat dinner and those kind of things, that didn't necessarily happen. So I think, like you said earlier, not calling a bottom here, may bounce along the bottom, but there's probably more upside risk. You miss risking the upside than downside risk. I mean, if you look at the Shanghai Composite, I know we usually talk about the CSI 300, but this was a clearer chart. You can see the current PE in blue is about 11. And on a historical basis, that's not the lowest it's been, but it's pretty low on a 10-year chart here. What's your thoughts, Peng Guo?
Yeah, PE obviously is pretty low. I think right now it's more like the emotional driven. So most of the people like I recall like the 2008 in the crisis period. So everybody just shrink and tied and increase whatever risk control. So make it people just ignore the opportunities at the bottom. So as the investment institution, so they continue in the market. So they have to think about it, how to buy the right sectors or stocks, yeah, and prepare for the next step. So I think overall, China still have many policies and promotions. Number one is they still increase the new tech or new AI related industry. So that is a green increase the productivity and get a new product, new technology, promote the export. So that's probably the growth area. Another one is internally, we also see China increase like the local economy. They get communicate from north side to south side, leading like the travel. So north side
Yeah,
people,
domestic travel.
we
Yeah.
yeah go to the south side people visit the north side and bring the economy and communications. So. You probably see the other country may be disappointed why China travelers are not coming here.
Yeah, the numbers fell off a lot. I mean, that's absolutely the case. And
Yeah, but
domestic travel,
locally it's like the pretty
pretty good.
good.
Yeah,
So it's
pretty
more
good.
like the domestic consumption and the circles. Hopefully they can get a boom up.
Yeah, I think allocators have to be more and more strategic. It's no longer just put your money, hope, wait, be patient. It's a little bit more strategic, like you said, and you have to follow the policy. That's why I think this the two sessions, the Liang Hui coming up in March, is going to give some indication about what the priorities of Beijing are, because that's what you've got to follow. So with that, we're going to leave it there for show A6. Thanks always for tuning in, and we'll see you next week.
Thank you.